All right, everyone. We are live. We've got Santi coming from his parents'
Hey guys.
basement. How, how you doing, Santi?
I'm doing great. Yeah, I've been visiting my family down in Mexico, and I've been here for a few weeks. And in true crypto fashion, I'm literally living in my parents' basement. And so part of the good thing of visiting them is I do have some of my stuff here. So old crypto memorabilia and merch, and this shirt is one of my true coveted possessions, which is DEF CON 5 shirt.
Ooh,
I remember
is
I
that when you
snagged a
is that
couple of
when
them.
you met Stani for the first time? Do I remember
Yeah, I
that?
think people have heard me say, yeah, that's where
Yeah.
I stumped. This is 2019, I think, 2019. And this was the last DEF CON before COVID hit. Um, and I remember seeing the booth. We're still in kind of like dormant prices. Crypto wasn't doing much. And I remember seeing the Aave booth, Lend, I guess at the time was known. And I just thought their merch, like the little funky ghost, was really nice. So that captivated my attention. And then I went out and ended up talking to Stani. And then the rest really is history. I ended up joining Parify, reached out to Stani, really convinced him to work with us. And then DeFi just kind of took the world by storm. And everything after that was a blur. But yeah, it's interesting how you never know which conferences are going to be good or not, but that one definitely for me was very special.
You know the real takeaway there, though. The real takeaway is
What?
you gotta have good swag. I remember. So we had
Absolutely.
at Permissionless, which by the way, I think Permissionless tickets either just went up or about to go up, but we just launched new speakers. Hold on, I actually haven't even seen. Hold on, I'm about to plug. All right, check out the first speaker lineup. We got Zaki from Somalia, talking about Cosmos. We've got Justin Drake, the ETH Foundation. We've got Mary, the CEO at Uniswap. Eric Voorhees, Stani is speaking. Kevin
Hmm.
Iwaki, Meltem, Ben Foreman, Tarun, Colleen Sullivan, Hasu, Hasib, Michalo, the Polygon co-founder, Ben Jones at
Hmm.
Optimism, Vanessa from Agloy Ventures. It's a good squad, good lineup. Shout out to the
Yeah,
Blockworks team.
absolutely.
So there's a
Nice.
permissionless plug. But I remember at permissionless, Dune had these socks that they give away, but they treat
Mm-hmm.
socks like really it's like coveted swag, and I think they do like
Mm-hmm.
unique swag drops at different conferences. I'm pretty sure is how they do it. And actually, if you go on the Dune site, they they have a lookbook for all their best swag, and I love looking at it because I'm like,
Wow.
oh, that's just like attention to detail and caring about things that like on a balance sheet don't necessarily matter, but get your community fired up.
Yeah, definitely. It's not the most
So
expensive swag. It's sometimes just really cool, funky swag.
exactly.
Yeah.
So what's the best conference you've ever been to?
Crypto or just generally?
You tell me.
Well,
I guess
crypto,
generally or both.
crypto, pretty up there. I think this DEF CON was great from meeting people, but it was terrible from an organization standpoint. Like, think about this. It was true to Ethereum
Like
at the
ETH
time that
Denver.
well, ETH Denver is really good. I actually haven't been to that one. But this one was great quality because it was a time where like we were talking about scalability and it was a huge discussion around that. And so a lot of the talks were high quality. But now imagine that. We were talking about scalability and congestion in the Ethereum network. The conference itself, you had one or two elevators for the entire conference, which were incredibly slow. And so it was just like very true to, it was just funny because we were all complaining about the same thing, which is this, of course, like, you talk about like bottlenecks and congestion and like the conference itself is like a clusterfuck. And so, yeah. And of course I love Japan. Osaka was just, it's just a great place. So that one was probably one of the best. I've heard I was going to go, but uh, what is it? Zcash's conference. The first one was in Toronto and then in Croatia, but the first one was very good. And I think you can listen to some of the talks, like much smaller, really high quality, technical, but really high quality. What's yours?
I mean, if I don't plug a Blockworks event,
Uh,
I think I'm out of my job. um,
Permissionless.
Yeah, I mean, permissionless is we've hosted DAS for years, right? But permissionless was like another. I think permissionless. I'm as biased as you can get, but permissionless was like on another level of a conference that I don't think any crypto conference has been able to achieve. But I also do think some of the like more grassroots events, like I would give a huge shout out to DevCon and ETH Denver are the two most like crypto native events. I think they can use some operational support, but yeah, like in terms of content and kind of seeing what's coming in the next like 18 months from now, I think those two events do a really good job. So
what I had heard, because I missed permissionless, but what I had heard was that you guys, the diversity of the crowd was there because you had a lot of crypto natives, a lot of crypto projects, but also kind of institutions and people coming down from New York and San Francisco and other places to like meet a lot of these people. So it was just a good gathering, I guess.
yeah. I think it's the largest crypto native conference. Like I think probably CoinDesk Consensus is probably a larger event, but that's like I wouldn't say it's as crypto native. Anywho, prices are ripping. We got the January effect is in full order. January effect, by the way, for I don't think this is just a crypto thing, but I think markets in general. Basically, you have tax loss harvesting in December, followed by repurchasing in the new year. Usually leads to positive price action. So, just looking at the markets today, Lido's up almost 100% on the year. Solana ripping up 70%. ETH is up like 10 to 15%. Bitcoin's up like 5%. If you look at funding rates across most of the major tokens have increased this year, marking what like could be a change in sentiment from perps traders. We just found 5 billion of tokens from FTX, who originally thought they only had 1 billion that they could find. Funny how that stuff turns out. Market cap's back above 900 billion. We're looking good. How you feeling?
Obviously, it's nice to see some life in the market and some, I mean, yeah, like who am I kidding? Of course, it's great to see a lot of the market up. Interesting, some of these narratives forming really quickly. But yeah, I think what's not to love when you see across your portfolio, in the green. So someone, some of these chats are just pure entertainment. Like you start getting like a lot of these groups just start coming back to life. And
oh yeah, we're back. A lot of GMs in the chats today. A lot of like,
it's like, oh, sorry, been MIA for last month. Like, how are you doing, guys? Like, so that, and then one person said, so meat is back on the table. Like not just ramen. And so I don't know. I just love the banter in some of these groups. But yeah, it's great.
Yeah. All right. So here's by the way, I would not be pulling out the leverage longs right now. I know there's some excitement, but might be short lived.
Yeah.
So here's
I mean, to be fair.
Go ahead.
Well, anyways, no, I was just saying, to be fair, like, you still have like macro in the front seat, and you have, a lot of people like the World Bank, like declaring that this year is going to be a recession across the board consensus, and people. The big question that I'm starting to get asked is, so what happens if equity markets continue to go down? What does that do to crypto? And like everyone's kind of focused on that. So 1 week of positive price action is a small data point, but I wouldn't, as you said, I wouldn't. The practical advice is, you probably shouldn't go like 10x levered or juice leverage kids. That usually doesn't end well.
Yeah. So here's what I want to talk about today. We've got this battle between Gemini and DCG going on. Really kind of this kind of fun public debate between, or not a debate, but battle between billionaires, with Cameron Winklevoss representing the left corner and Barry Silbert representing the right corner. So I want to talk about that. FTX recovery, spend a little bit of time on that. Maybe a little more crypto native conversations. LSDs in Shanghai is on track, so we can talk about that. Some interesting announcements, like Coinbase did layoffs, Avalanche partnered with AWS, Ondo Finance brought Treasuries on chain, I think it was. So where do you want to start? You want to start with Gemini?
Yeah, let's start.
Cool. Reminder of the situation for folks who have not been paying attention. Basically, Gemini lent almost $1 billion of funds from over 300,000 users to Genesis from the Gemini Earn program. That capital's been frozen for almost 2 months now. There was there's been two letters on Twitter. So there's a first letter from Cameron Winklevoss kind of explaining the situation. The second, Cameron just published his second open letter on Twitter this week, basically addressing the board of DCG, demanding that Barry Silbert be let go and replaced as CEO. There are a couple interesting points in the letter. The first is that Genesis was left with a $1.2 billion hole after the collateral liquidation from a loan that they made to 3AC for $2.36 billion. Also, according to Cameron, Genesis only accepted, this is his claim. This is, I don't know if you can find facts to back this up, but Cameron claims that Genesis only accepted this kind of subpar collateral loan because 3AC was using the borrowed money to actually ape into the GBTC spread trade, right? Increasing the AUM and their sister company, Grayscale's profits. He also kind of talks about, just like continues on this GBTC trade, explaining that as GBTC switched from a premium to NAV to a discount, Genesis continued to lend to Three Arrows with GBTC as collateral to mitigate it from being sold on the open market and furthering the gap. DCG announced it would assume Genesis's liability, but in reality offered a 10-year promissory note with a 1% interest, which did not help fill the hole. Barry, so that was released at like 8 a.m. And then Barry returned with a letter to shareholders. I don't know if you read that later in the afternoon. It was kind of bear market hopium. It didn't have like any, it was just like, well, we'll get through this. Trust me. What do you make of this situation?
Well, I don't have any particular insight into the situation other than what's being publicly discussed between these two folks. But the fact that Barry is, what I'm reading into it is Barry's being, at this point, lawyers have taken over the communications of both parties. Barry historically has been someone who's tweeted at will, if you will. Like he's just, tweets like, we just acquired a massive bag of Zcash and, it's going to be a big week. And like, when you look at a change in the way that he's tweeted, I think is pretty indicative of the situation of how dire it is. And lawyers are probably heavily, monitoring what he's tweeting now. And also the language that Cameron's letter had, if you look at the prior one versus this one, I think is pretty indicative. Not only in the last one, he used certain keywords, and there's some good threads of lawyers kind of dissecting some of these reminder folks that, some of the keywords have a very clear, I guess legal, implications, if you will. And in this case, he didn't really hold back. I mean, he just sort of said, this is fraud and Barry should step down. And, I think, I tend to believe more of the amount of information and kind of precision that the letter of Cameron had, I think was pretty insightful to see for the first time. But yeah, I don't know where this ends. I mean, we've talked about this in prior episodes of sort of a coordinated action between creditors and kind of trying to resolve that situation. There was another Genesis counterparty, I think it was an exchange, that refused their plan for repayment. That was also announced this week or in the last couple of days. And so I would be really interested to understand what that was, to extend, and how that is being worked out, because at the moment it just seems like it's pretty dispersed. I mean, there's a number of creditors. I don't know the number, but you got to believe it's in the, I don't know, 20, 40, 50, 100. And I'm not sure how coordinated they are, but I think it would be probably interesting to see how that's shaping up.
Yeah.
We talked a lot about this in the episode with Fubar.
Yeah. So I think we knew that this was happening and Genesis was lending to Three Arrows. It's just funny to see Cameron lay it out like this, because when you actually just zoom out, Genesis, it's pretty bad risk return trade here, right? So Genesis was lending money to Three Arrows so that Three Arrows could recursively buy Bitcoin, swap it for GBTC, post the GBTC as collateral with Genesis to buy more Bitcoin and swap it for more GBTC, which obviously pretty risky. 3 Arrows was on the wrong end of that trade and blew up, but it also left Genesis with kind of all of the downside of this GBTC ARB and none of the upside, right? Like they're squeaking out 5% or something and lending to a really risky borrower. So I don't know, just like seeing Cameron lay out the trade like that, I'm like, man, this was not, you were taking a pretty zero sum trade and turning it into what quickly obviously became a negative sum trade. So I don't know. But I don't know if you read Byron's newsletter this week, but he had a good point on like thinking in probabilities. And it seems like DCG kind of and Genesis kind of put this like 100% probability on Bitcoin continuing to trend higher because it all unraveled really quickly. But anyways, seeing Cameron lay it out like this, I was like, man, that was a pretty poor risk reward trade for Genesis here.
Yeah, because reminder, folks. I mean, most of my understanding is most of the cash flow, most of the profitability of DCG comes from Grayscale, which is the management fees that they're charging on these products like GBTC, THE, and some of the other trusts. And so, from that perspective, you almost wonder like they just kind of melt. Everything was the focus was let's just continue to milk this business and at all costs. And it sounds like they were willing to, from not the very beginning, but for a while now, just continue to use Genesis as just part of that objective at all costs, it seems.
Yeah.
And so kind of at this point, from a probabilistic standpoint, is they're probably, we were having this discussion in the prior episode, which is, are they going to let Genesis go, and how much value is there in Genesis? And I think it's starting to probably become clearer by the day that they're willing to let just Genesis go, and the real focus here is protecting at all costs Grayscale, because that continues to be. I read recently they're obviously now looking to probably divest some of their venture portfolio, which is vast. I mean, it is. I would probably.
It's vast. It's vast. All right, so it's vast. They have more than 200 investments, biggest exchanges, banks, custodians, 35 different countries they've invested in. The Financial Times reported that the total value of DCG's venture portfolio is $500 million.
$500 million.
That is so wildly off by like an order of magnitude there.
Yeah, you would have thought it would be much larger.
Far larger. I mean, let me read you some
of the... FTX? FTX Ventures was much, larger.
First, I mean, they've been investing. Let me just read you some of their investments. They have substantial stakes in Chainalysis, BitGo, Blockchain.com, Brave Browser, Circle, Coinbase, Coinmetrics, Dune, The Graph, Silvergate, Shapeshift, Ledger, Kraken, Paxos, Fireblocks, Etherscan, I think, Wire, although Wire is now a zero. Like the list goes on. I mean, nearly every company, it's just like DCG is just like an automatic into their cap table.
They're never leading these rounds, though.
They're never leading. They don't lead, but they do pretty early deals too. I just think that's wildly. I mean, what would you, if you had to put a number on it? What do you think?
Well, this goes into the. I'm not sure if that number is deployed capital or marked to market in some way, shape, or form. Because if they're trying to assess the current value of that portfolio, then based on valuation methodologies and illiquidity discounts, then maybe you get to 500. Like if you're applying a very steep illiquidity discount on locked tokens or some like illiquid positions, then maybe that's how you get to 500. Or maybe that's just deployed capital. Like they've invested 500 million, which seems reasonable in my mind. Like that's still a lot of money to deploy in early stage series, seed and A, B. Over the years, it's probably correct, I think.
All right. I might be wrong there, but feels low for me. Feels low to me.
Again, like the key is like you never are marking say that you invested in, I don't know, the Graph in some of the earlier rounds, and then the token launches, you're still locked for like a year at least. And so you can't just say, oh, look, you're not marking that position mark to market because it's illiquid and locked. And so you're applying, at least this is what I think you should do, is you're applying a pretty hefty discount to that position. Like upwards of 50, 60, 70, up to 90%, because some of these tokens have low float. And so,
Yeah.
on paper, you would say, wow, they made a killing on the graph, but they haven't really, like, as an example.
Okay. All right. I might be wrong there. Let's get into FTX. So
Yep.
there was an announcement by leadership. I think it was the week before Christmas. I think it was like December 19th or 20th that they had that they could only find $1 billion. And I think a lot of us on the other end were like, only $1 billion? Like that feels small. I thought you had 8 billion. Now that's across their venture portfolio and illiquid tokens and stuff, but okay, well, where's the rest of the 7 billion? It just came out that FTX has now found 5 billion, which is much closer to the number that both Sam and the guy who took over, whatever his name is, Ray, I think it is, they've both said the number, the total number is around 8 billion that FTX has. Now they've located, here's the quote, we have located over 5 billion of cash, liquid crypto, liquid investment securities measured at petition date value. It does not ascribe any value to holdings of dozens of illiquid crypto tokens where our holdings are so large relative to the total supply of our positions that they cannot be sold without substantially affecting the market for the token. So I would say this is a good announcement. This is a pretty positive announcement that we've located more of the money. So it's good to see this.
Yeah. I mean, I think I was not sure. There's some trading, or like they're pegging like the price of recovery. I think there's a market for that, and it's trading at like 17 cents on the dollar. I think it went all the way down to 8, 10.
Wait, explain that to me. There's 10 cents on the dollar for what?
Presumably, if you're owed capital and it's like money there, you could sell your position, or at least people are pricing it this way in terms of how much you're going to recover for every dollar that you have stuck in FTX. And at the moment, it's being priced at like 17 cents.
Yeah.
So if you have $100, you're going to get 17 back. Yeah. Now I think which is people are saying it was probably lower than that. Like it got all the way down to 8 cents, and like 8 cents for every dollar, not 8 cents for $100.
Yeah.
And yeah, the interesting thing is like you're comparing it. I think one of the interesting things like that I didn't know, but I learned during this process is that the Madoff trustees, I think, ended up recovering 10 years later, like 75 cents. I think you were the one that said this, like 75, 85 cents on the dollar, which is pretty good. I mean, of course, it took time value money and opportunity cost, but still, it's fairly good, I guess. Considering even Mt. Gox, people that were affected by Mt. Gox haven't even seen a single Bitcoin back, and so this is fairly positive if you're getting some capital back, and I wonder how much time that's going to take, but yeah, it's looking a little bit more promising than what it initially started. To some people are saying.
So I just looked up the 5 million or 5 billion of what they're saying is worth 5 billion. Now I'm not so positive on this. Let me read it to you. 700 million of Solana. Most of that is locked. 575 million of FTT. 371 of Maps. 127 of Oxy. 90 million of Wrap Bitcoin. 82 million of Bona. And about 500 million in random other like SPL tokens. That is not a liquid 5 billion. That is, I don't know who's taken 575 million off the market right now. Yeah.
No. We talked about this in a great episode with on the Terra situation. One of the more interesting things that you got to think about is whenever you're thinking about like, say you have a large position in a particular project, like you can't take spot and then multiply by the number of tokens you have. It's like, what is the transacted value that you can actually exit this position in a graceful manner? And that is more, as you said, like you can't really sell some of these random tokens and get that principal, like that amount back. And so, yeah.
Did you read Sam's Substack?
I was trying to get through it. I assume you did.
Yeah, I did. I want to
Very
save you
similar.
guys the hassle of reading it because you should not go read. You should not spend another second uh, reading what Sam has to say. So here's some of the takeaways. Basically, when the bankruptcy was filed, FTX there was a decent bit of talk about like FTX US. So FTX US had excess liquidity, which is above like what that means is like above 1-to-1 coverage of customer assets in the range of like I think it was 350 million. They said that he said that FTX US held I think it was like 500 million in customer asset. I forget if the number is 350 or 500. Also said that FTX US was completely solvent with a significant buffer. I think what he was trying to show by talking about FTX US was that FTX US would have been fine if it didn't get looped into all of this. That they could have basically just severed FTX US like the day all this went down and like pushed FTX US to the side. FTX US would have been totally fine, but FTX the normal FTX would have gone down. I think that's what he was trying to show by doing that. He also mentioned FTX trading had about 8 billion in assets when Ray took over. That's like in the ballpark of what the Ray and his team have said. So that was good. A lot of rehashing of like how and why Alameda went under. They're just another domino, victim of crypto winter. This is a CZ PR campaign. This all actually would have been fine but like I got the lawyers pushed me out. I had a plan to fix this. He said that no funds were stolen. This is where it got kind of wild. It's like no funds were stolen. Um, he's like, we had a clean gap audit for 2020 and 2021. He's like, billions in funding offers were coming in when Ray took over. That's where I was like, all right, buddy, you should probably sit down here. So, yeah, I think there's still this
Wow.
like glaring omission in from both Sam and from Ray, which is that there's no indication of what the total customer deposits at FTX trading were. So while
Hmm.
there are there are estimates of assets that seem to be kind of coalescing around the $8 to $10 billion number, we still really don't know the size of the whole.
Hmm. Yeah. Speaking of, I'm not sure if we're going to talk about this, but a few hours ago, it was just announced that Nexo's offices in Bulgaria and Sofia, the capital city, got raided
Oh, you
by the
don't
police
say.
there. I don't know if you saw that. Yeah,
I
well, I
did.
mean, look, Nexo came out with a communication. Apparently, it's tied. The investigation has been going on for a couple months, and Nexo employed over 30 like compliance folks, and uh, apparently it's tied to some sort of breaching of KYC ML like sanction like laws, and so yeah, they're being investigated now.
I will just say when something like this comes out and the like an agency is like, oh, we're investigating because of KYC AML, oftentimes that's not the reason. It's like
Hmm.
that's their door in. They're like, they need a reason to investigate a company. So they'll be like, they probably found that they broke a KYC AML thing. So they're like, boom, that's our reason to go look under the hood. Um,
I see. Like it's
I'm
probably
just
the
like,
easiest. It's probably the easiest way to get a search warrant.
look, I don't know what's going on with Nexo. Let me just say this.
Mhm.
BlockFi is down. Genesis is down. Every single other competitor who runs a business just like Nexo is down. They continued offering like not just like 3% yields or 5% yields, but these like ludicrous 8 to 12% yields until like a month or two ago. So I don't know anything. I hope that Nexo is fine. I hope that especially the users and customers of Nexo are fine. If you still have money on Nexo, I'd probably recommend you kind of keep that stuff safe. But I'm just skeptical of like how can only one business make it and every single other one of your competitors fail. That's I'm
Mhm.
just
Yeah, I
questioning
mean,
that. Yeah.
yeah. Let me ask you like take a pause and I'll ask you a question because this goes back to what you asked me at the very beginning, like how you are feeling generally about crypto. But like, how hard has it been for you to see all of this go down? And like, have you lost faith, A, in crypto, B, of the people working in crypto? And how does that compare to like there have always been like scams, not just in crypto. You just see them more visibly in crypto, I think. But has how hard has it been to just see the amount of like destruction and I guess just felt like every single poster child of crypto that was glorified by the media is some way, shape, or form just got too caught up and too greedy and is blown up.
Hmm. Let's see. I think
Does
I
that weigh down on you, your team, morale?
no. So no, it does. It doesn't weigh down on me at all. Actually, it doesn't. Like I don't. I think there's actually a feeling of embarrassment. There's not a feeling of disheartenment. I'm not disheart. I'm
Hmm.
not. Um, I think there's an initial feeling of like actually anger and like being really pissed off with folks like Doe and Mashinsky and Sue,
Sam.
Sam, like those folks. Like an initial feeling of like pissed off and anger because you and I know so many people who lost so much money, right? Like we have we've invested in
Yeah.
companies and they've gotten hurt. Like I have friends who, came into the industry at the exact same time as me. They lost 99% of the crypto that they have. And I'm getting messages being like, look, I don't really know what the last 6 years of my life were for. Like I don't have anything that all the things I've built up over the last 6 years, the company I've built and the company I worked at that I
Yeah.
helped build and the money that I've made, I have none of it. So what was I just doing with it? So that's really, really upsetting to see. Um, and then it's embarrassing. It's embarrassing when I'm at like a dinner and I'm the crypto person, obviously, and I've been talking about these great companies, and then what the people see in the headlines is like FTX and BlockFi and Genesis and DCG and these billionaires fighting on Twitter. It looks like a joke. It looks like a joke.
Mm.
But what overpowers all of that by an order of magnitude is seeing things like the Friday Ethereum all core devs call talking about the Shanghai upgrade being on track for a
Mm.
March activation and talking to Chow about the future of like wallets and seeing brands continuing to push into crypto and having that call with Eigenlayer that you and I were on,
Mhm.
just being like, look, I don't know if Eigenlayer is going to make it, but but I don't have conviction there. But like, just seeing that there are amazing founders and builders building this stuff, and yeah, that optimism like way overpowers and overweights this feeling of like disenchantment and embarrassment.
Yeah. Yeah, I feel the same way. It's sometimes hard to see that how many people have been affected this time and the sheer like number of wealth destruction, I guess. But I think it's different than price going down. It's a whole new game when you have been defrauded, and so yeah, it's tough. But no, I agree with you.
I also think that every industry, I think reading history helps with this. Like reading about early days of the railroad industry, reading about the early days of the internet, right? And then like in the 90s, when the internet was starting to get like become more corporate, reading about the early days of like the oil industry, like there were pretty like raging scams in all of these industries and these huge frauds, but less money associated with it because those industries were like basically there was a harder asset and the money was one step removed. So like you have oil.
Hmm.
Oil's not directly money, but so the money is one step removed. Or like railroad, same thing. A lot of money, but like the railroad's not a money. Even the internet, the core asset of the internet is information, and money is one step removed. The core asset inside of crypto is money. So when you have a fraud, money touches everything in crypto. So yeah, these fraud people
Hmm.
end up like there's just more money at risk earlier on in an industry. So every industry this early
Hmm.
on has frauds, but because this is a
Hmm.
money driven
Yeah,
industry, yeah. So anyways,
I think my last takeaway from this is like if you look at most of the crypto collapses, 9 out of 10 or all of them have been a rejection of the old system trying to work within the confines of what is crypto. Um, you look at businesses that were not transparent, that were heavily centralized, that had, backdoors, and that's not the ethos. That's not crypto. That's a crypto service provider. Um, and so I think it's pretty. I think we'll be very symbolic. We'll look back and say, yeah, this is a time where we try to implement old practices that go counter to the ethos of decentralization, of what crypto really stands for, of self-custodying your assets, of managing and being in control and fully transparent smart contracts that execute a certain logic, that you're just trusting what is in the code and not necessarily where you're depositing and whoever's custodying your assets. And I think in many ways, if this industry is really going to grow by orders of magnitude, then you better off having it now. We learned this kind of lesson, which I think has been more and more. I think people, even in traditional mainstream media, and people are starting to appreciate what decentralization actually means, and putting a finer point on that. So I think that's the kind of the positive of all this, which I think is will set us up nicely for continued growth over the years.
Yeah.
And
Here's where I would
really
be
like build. Yeah.
here's where I would be disheartened, Santi, is if Aave went down or Maker failed to continue producing DAI or Uniswap couldn't operate in the US or like if actually that could happen, but like if Uniswap went down or something like that, then I'm like, ooh man, I don't trust I don't trust the BlockFis and Nexos of the world, but I do trust Aave, and then I don't shoot. Well, now I can't trust Aave. Then it's like, okay, well, what are we doing here? So, anyways,
Well, I guess the cynic could say, hey, listen, there's been like 5 billion of or like I think it's between 4 or 5 billion of hacks. A lot of them happened last year. The Ronin Bridge hack was 600 million, and a few others that were, and so that to me is where I tend to focus a lot of my attention, which is, hey, we really need to get security and come up with better standards, services that can help people. Just if everyone's going to move on chain, if there's a version of this world where that happens, then we
yeah.
need to have better solutions in place.
So agree, but something like the Ronin hack was like those bridges were like 6 months old or like 12 months old max, and that's when I'm like,
Right.
I know what it's like to build a startup that's like six months after launch. It is a total shit show. So it's like that's where I'm going to in crypto. In every other world, every other industry, every point in history, when you have a startup that's 6 months old, if something goes wrong, something fails, a product breaks, maybe people have to get laid off, something, but you don't lose money necessarily. Like it's not
Right.
directly losing money. In this situation, if a bridge goes down, yeah, you could lose there's 100 million on the bridge, but like crypto is weird in that way. So
Yeah. Yeah.
we could probably do a better job of like not putting 500 million onto something that's a year old. So let's talk about something optimistic though, which is
Yeah.
the Friday ETH all core devs call. That gave us further evidence that the Shanghai upgrade is on track for a March activation, which is super exciting. Basically, Shanghai and like TLDR on Shanghai is that it allows withdrawals from the Ethereum beacon chain. And I think the like why behind this event is everyone's looking at how much basically about what's going to happen with staking, right? Like given that there's a large amount of ETH that will become liquid, like what basically happens with withdrawals? Is there going to be short-term sell pressure? There's two ways this could go, right? There's either going to be like short-term sell pressure, but a greater incentive to stake. There's either going to be like less money staked, or everyone's going to say, "Oh crap, now this is liquid. Let me stake more assets." So I'm really curious to hear what. I don't know if you have a take on this yet, but do you think this will, in the short term, like drive more amount of staking, less staking? What do you think here?
I mean, it's difficult to. I can't pretend to understand where crypto is going to be in the short term, but I think it's quite positive to finally. It's another further step in this transition to proof of work and freeing up like the locked ETH deposits in the beacon chain. And then you have I think it net very positive. What it will do in the short term, TBD. I've seen some analysis that now you're going to have a true staking yield, which might be quite interesting how that dynamic plays out. One of the things that I would be looking at is the amount of ETH staked and the yield, and relative to other opportunities that you can get within crypto and then outside of crypto. For instance, people are comparing the ETH staking yield with Treasuries, and it's kind of a irrelevant comparison. It's not, but it's you probably shouldn't be comparing it to risk-free rate, but yeah, I think it will drive probably now that you have like a more liquid market and more fluid staking and unstaking. I think it is very positive for just Ethereum's network. And so, yeah, I mean, you could be in a situation where a lot of the ETH continues to be staked, and the float, combined with the deflationary pressures that you probably have seen, um, just creates a situation where there's far less ETH circulating and that is not being staked, which for every incremental dollar that comes into the space is just like the sensitivity. So you might have just a more volatile asset, you know what I mean? Um, so
I
that
love
could create
I,
short-term volatility.
I love this Ryan Watkins tweet. He said it's undeniable that Ethereum upgrades and innovation cycles are the leading drivers of crypto markets now, far more than Bitcoin halvings. If you're not paying attention to Ethereum, you'll have a hard time understanding where we're going. And as more and more the industry gets built on top of Ethereum, and I just think like that becomes the driver. It's going to be interesting. You and I have talked about this, I think, offline, but Bitcoin halving has always been the big driver, right? It's like always one of the big things that ends up kicking off this usually a delayed bull market, maybe 6 to 12 months later. But I think that this could be. I think he's got a
I
point
mean,
here.
yeah,
Yeah.
yeah. It's one is just like, oh, like it's a so what event. The other one is far more interesting from an
Yeah.
innovation perspective.
Also, I think we've been ragging on Bitcoin too much recently. We'll give it a break in this episode.
Well, no, I think what you're going to say, like the amount of tweets is flipped, right? There's a great chart showing number of tweets, Bitcoin relative to Ethereum. It's flipped recently. I think it's the first time it's actually crossed, and there are more ETH related tweets than there are Bitcoin. And so, again, I'm
Yeah.
not like entirely sure how the calculation goes behind the scenes, but not surprising, right? There's just so much to talk about in Ethereum land, and everything
Yeah.
going on in the ecosystem relative to what's going on in Bitcoin.
Yeah.
Not to dismiss anything that's going
We
on in Bitcoin.
we some of the updates to liquid staking are a little out of my realm of understanding, honestly. Like there was a like Rocket Pool just added Rocket Pool is another liquid staking derivative provider. They just added Coinbase Ventures to their ODAO. My understanding of the ODAO is like it's a bunch of community members who run these special Oracle nodes that transmit data from the beacon
Mm-hmm.
chain to ETH1 in order for the protocol to function properly and safely. Some of that stuff is definitely out of my league of understanding. So actually, shout out to our producer Garrett. He's lining up a couple of liquid staking episodes where we're going to get a little deeper instead of you and me pontificating on things that I at least I'm not fully able to talk about.
Yeah, yeah. I mean, I was running a validator way back in the day when
Were
Tezos
you?
launched and a few others. Yeah, yeah.
You
We
were a
tried to do
Tezos
like
validator.
a baker. Yeah, and then yeah, that got me thinking into like how liquid staking derivatives were gonna. This was like 3 years ago, more than 3 years ago.
When did you spin up your first? When did you start doing this?
I think uh, end of 2018, 2019. We try to me and a couple other folks that I know in the space. We didn't feel comfortable delegating, and so we wanted to spin up our own. And that got us into a pretty interesting journey thinking about like the regulatory implications of staking versus mining, and um, one of the best things that came out of that was the Proof of Stake Alliance, which Evan, who then ended up going to Bison Trails, and then now got acquired by Coinbase. That organization really to advocate for staking and clarity on the tax side of things, on the kind of money transmitter side of things. Yeah, it was pretty interesting. Back then, it was back then it was like a few people talking about it, but we were just too early in the game. A lot of the folks that continued in this path, like Figment and Bison Trails and Staked, have done exceptionally well. I mean, it's a
Yeah.
great business, I think. But the good thing of that is I ended up like doing the seed round for Lido when I was verifying, so that was pretty good.
Not too shabby, huh? Let me ask you this. Okay, so
Yeah,
if
wow.
you don't have to say specific numbers, but like what range did Verify get that Lido token at?
I'm not sure it's public, but it was probably one of the best deals that I did by far. Like it was a small round, and it was a very well constructed round, and a lot of people ended up passing on that. I just thought it was it got a lot of the large Ethereum holders involved, a lot of angels, a lot of like other projects, and we were one of the few funds that like probably committed, if not the largest, the second largest check.
Hmm.
But it was, you know, I had known the team from my days when I started staking, and these guys were the best. They were winning like the game of stakes competition, which is the Cosmos like incentivized testnet to like attack basically the network. And that's how I knew the core Lido team, because I just thought they were the smartest guys to spin up validators and had a very deep understanding of how to run like proper infrastructure. And then like Constantine, I'm not sure if we've had him on this podcast. I think we may have, or I've been on a few podcasts with Constantine. He's just one of the smartest guys out there. He's one of the co-founders of Lido. And early in Ethereum, early in Solana, like very open-minded, and has been involved in a lot of networks. And so that to me, again, it's always a team bet. And so these guys were the smartest, and that's what gave me a lot of conviction to back them at the time.
Nice. So what does a fund like Parify do? How do you think about, we don't have to talk about Parify, but like maybe we'll generalize crypto funds. So how do you think about selling that Lido?
Yeah, it's a very good question. Risk management in crypto and managing portfolio is quite difficult, in the sense that, there could be a time where a token just grows to a certain threshold where it becomes just prudent to size it down. When you have a position that ends up becoming greater than 10% of your 5, 10, 20% of your fund, then I think you have to, at that point, think more systematically of saying, it's probably prudent to size down that position. Some funds do it, some others don't. In venture, it's different, because say that you were benchmark, you did the seed round of Uber, and you kind of could wait 10 years, maybe try to sell in the secondary market, but once it IPOs, you have like this lockup and you can sell after that. So obviously there's like lockup considerations that, you have to, there just exists, similar like in traditional markets, at least a year, you're vesting over multiple years, 3, 5, 7 years. So that's the more practical consideration. But yeah, it is the hardest thing to do, to be fair, like managing that relationship with the team and saying, hey, look, I've had difficult conversations where I say, listen, like, it's not that I don't like the project, it's just that it's grown to a point where it's too big of a position. And at that point, it's like, okay, can you find like a natural seller? And the way to do that, sometimes the team wants to buy it back. Other times you find another fund that's willing to take over the position. And so, yeah, it just depends on your strategy, but it's really hard. I don't have a good answer to that.
Yeah. Lido, when like, I don't know what you like, the live token price was in January of 2021. I think at like $2, and now it's back to $2. I'm curious, just obviously not financial advice, et cetera,
So
et cetera.
wild
Like,
swings.
yeah, I mean, yeah, it ran up to $6 or $7 and then fell down to like 50 cents, and now it's back up to $2. How do you think about allocating to an asset like Lido right now?
Well, Lido specifically, like in terms of like category liquid staking, or just generally an asset that has that amount of volatility?
Not an asset. I'm not talking about
That's,
volatility. I'm talking about like, do you like Lido right now at $2?
I don't have a view on that. Like, no.
Cool. Pushed it one step too far on the not investment advice.
No,
Huh?
listen, like it's like you could ask. I get asked this question all the time, right? And my response is, why are you asking me this question? And it's, what's your investment horizon? Is it 3 months? Is it 1 day? Is it 3 years? Is it 10 years? And so I tweeted about this earlier this week. It's like, it's again impossible to understand where even the majors are going to be in 3 months. 3 months. Where's Bitcoin going to be?
Let
Where's
me
Ethereum going to
rephrase
be?
my question, because I'm not actually worried about I'm not really asking about the price of Lido. Here's a better question. Lido is the dominant liquid staking provider. If you
Correct.
want to go long liquid staking providers right now, and you think liquid LSDs are going to be a bigger thing in the future, like Lido feels like a pretty good play. However, they're starting to face a lot of competition, like CBETH and like
Rocket Pool
Rocket
and
Pool and things like that. And there's going to be more and more. How do you think Lido fares versus other competitors in the future?
I think the team, as I said earlier, is the strongest.
Yeah.
I haven't looked as closely into Rocket Pool. They've had some issues. As has Lido, to be fair. Like the question that has come up over and over is the amount of concentration and power that Lido has in terms of like it's become the second largest or the largest decentralized. And the question is, should I'm of the mind that competition in the staking as a service space is very positive and healthy for a network because you never want it's like a fair victory. If Lido captures 100% of the market, that would be a terrible outcome. You
Yep.
never want that to happen purely for decentralization reasons. And so for that reason, I want to see other providers succeed and I want there to be variety because that it creates a very healthy competitive market. Now, Peter Thiel might look at me and laugh and say, what an idiot. You want to invest in monopolies, but not in crypto. I think you
Yeah.
always want to have these like a few alternatives and just a distributed set of options and like percentage of ETH staked in Lido should never be above, I don't know, 40, 50%. Definitely not 50, but like, and so I think there could be a smart contract bug in Lido. There could be a smart contract bug in Rocket Pool. And so I think for that reason, you never want to have too much, a single player capture a disproportionate share of the market. Like it's different. Like if it like Uniswap commands market share, a lot of market share. It's probably the protocol that has the most amount of market share across any category. Like the number of swaps that Uniswap is capturing is just continue to dominate. Like just people trade through Uniswap. It's the best liquidity. If Uniswap goes down, you can find alternate places, right? Like of course, like if there's like a bug and some of these liquidity pools get drained, it would be devastating. But not nearly enough as if there's a smart contract that for whatever reason truly locks up a lot of that staked ETH and all the validators get compromised, whatever that is. But the like when you think about the relative like risk of some of these liquid staking providers going down versus another protocol in the whole entire crypto ecosystem, these are perhaps the most important pieces that
Yeah.
you want to really monitor.
Yeah. Let's get into more news.
But that being said, it's a very valuable service.
Yeah. Avalanche. So we have an Avalanche podcast dropping Monday, maybe. I think it drops Monday. We'll see, either Monday or Friday. But we have an Avalanche episode. We did it with the founder, Emin Gun, and then also John Wu, who's the president of Ava Labs. Pretty interesting episode. So that drops on Monday. They just had a big announcement, which actually they announced it right after we stopped recording. So, so we couldn't talk about it with them. But they announced on Wednesday that they've partnered with AWS to accelerate enterprise, institutional, and government adoption of blockchain. AWS supports Avalanche's infrastructure and dApp ecosystem, including one-click node deployment. It's pretty interesting. Through the AWS marketplace, AVAX popped 20% on the news of a partnership with AWS for deploying subnets. Super interesting to see this because people still underestimate the power of BD in crypto. And I think we've all been kind of surprised by Polygon's success in 2022. And what Polygon did is they said, we're going to own a niche. And the niche that they chose was big brands getting into crypto. And the big brands that they wanted to capture were like, I don't know how to describe this, but like the cool, like the Web2 brands, like the Disneys and Facebooks and things like that of the world. I think Avalanche is starting to carve out their own niche, which is like the large corporates who are maybe less sexy. So the way that they're doing this is by these partnerships with AWS. They also have a huge partnership with Deloitte, actually. And I think you could see Avalanche in this bear market try to win also KKR. Like they could try to win this, like the big corporates playing in crypto game, which I don't even know what big corporates would do in crypto, but like that I think it's interesting to see them try to carve out this niche.
Yeah, tokenized funds, if you're
Tokenized funds.
KKR,
Yeah,
some
exactly.
Apollo. I think it's interesting because Amir comes from an academic background. He was at Cornell for a long time, and then John, I think I always see him on Bloomberg. Like he's like a frequent host that like gets invited there to talk about crypto and what they're doing. So yeah, it's interesting. They're carving out much more of that. Like we're the people should listen to the podcast, but a lot of things we talk about there is how they're subnets, and it gives like a flexible kind of architecture for some of these players to like grow into and have like a sandbox environment, baby steps to get into this wild world of crypto. And so from that, they kept emphasizing over and over in the podcast, like we're a lot, this is very good from a regulatory perspective and regulatory compliance. A lot of these folks are really focused on that. And so, whether you believe that to be true or not, go listen to the podcast and let us know what you think.
Yeah. So, yeah, it's interesting because Cosmos, right? We had Zachy and Jack on, and they take a totally different approach. They're like, no single entity to generate the deals, no BD. I think that's philosophically good, but tactically bad. Like there's a company I invested in, and they're like, I was like, something just happened in the news. That means that it's a huge opportunity for them. I was like, guys, like turn on the fire, time to go. They're like, we don't really have a BD. I was like, let me help you set up your like, get the sales team going. Like I can help you guys out. And they're like, we don't really have a sales team. Like we do things more grassroots. And I was like, all right, let me just line in the sand. Like that is an old school strategy in crypto. I'm sorry, but get a CRM, Salesforce or HubSpot, get a marketing team. If they're B2B, like they're not really like a consumer company. I was like, get a CRM, HubSpot or Salesforce, get a marketer, drive the leads to your sales team, go hire a BDR and SDR to go outbound, set up leads for your account executives. If the lead is good, you flip it from a marketing qualified lead into a sales qualified lead. You push it down the pipeline. You close it. Once the deal's closed, you've got an account manager. I was like, come on, folks. Like, it's a tried and true model here.
This is an enterprise software playbook here.
Tried and true model.
Yeah. It's difficult, right? Because it depends, right? It'd be BD in crypto historically, like, okay, Ethereum, like, what's the BD of Ethereum? It was like ICOs, I think. It's made people a lot of money, and then everyone became really vested in Ethereum. But I think that, as you're right to point out, it's different if you're a competing L1. It's an uphill battle, and so you need to have a lot of resources. That's why a lot of these funds, a lot of these layer ones raise a bunch of capital to hire a BD team, to have incentives to attract developers to come over and build. But yeah, it's also tricky, right? Because if you're a front-facing crypto protocol, you can't really advertise. I mean, it's quite difficult to advertise in Google and some of these other platforms. Like they make it.
You can advertise. You just can't advertise your crypto price. So like Avalanche took over ads on the New York subway, but it was like, come build on Avalanche. And my theory would be that they didn't actually use those to drive leads. It's that they then use those to then put that in a deck that they're pitching to Deloitte and AWS, being like, look how real we are. We advertise on the New York subway. It's a psychology thing. So I think that's.
I remember watching Gemini buses around New York for a while.
Exactly. Anyways, I think that's something that changes this market. Is like, you have a product, you have a B2B product, go build that. There's a tried and true model here, folks. Like, Salesforce created it, and thousands of other companies have implemented it. Go run the playbook.
I mean, so let me ask you a question. Have you ever thought about building a CRM? You have a lot of information from subscribers, people that are interested in crypto. You put on a conference, you have a research portal. Like, what's to stop you from adding and plugging in another service that says, hey, let me connect leads here?
So we use a CRM internally for like our sales. There are two different CRM type things at Blockworks. There's the sales CRM. So like our sales team reaches out to Coinbase and we're trying to sell them a sponsorship or something at a conference, and that's all tracked in a CRM. And then there's the CRM for like content, basically, which we don't have, but we're talking about building, which is, Garrett on the podcast side might reach out to Constantine, you said, from Lido to get him on the show.
Mm-hmm.
Well, he has no way of seeing that someone else on the editorial team has just invited him or had just did a story on Lido and has a relationship. And that someone on the events team has already reached out to him 2 days ago to invite him to speak at Permissionless. So that's the CRM. But it sounds like maybe you're talking about something different.
We're more offering like this. You have like the guide points of the world and some of these like research, allowing people to connect with experts. Like, yeah, I don't know. Was this thought? Maybe it's a dumb idea, but yeah. I guess you're at the hub of like reporting, but also research, and then
they're like first party data and like information on your subscribers and audience is a huge trend in like the media world, is like what everyone talks about. And it's funny, we've been hiring a VP of sales, and there are two types of VP of sales we've been talking to. They're like crypto people who are maybe a VP of sales at another crypto company and they'd come over, but they don't know media. Or there's media people who maybe they're the head of sales at like Barstool or Axios or Huffington Post or something, and they like really get media, but they don't know crypto. And the media people are like, here's how you scale Blockworks. You sell into the agencies, you get like first party data. It's like it's a very different world of media. It's funny, yeah. So, anywho, talk about L1s and the strategies. I was talking to someone who's pretty deep in the Japanese crypto world. You ever heard of something called Aster? ASTAR?
No.
So I go, what do people build on in Japan? Like, what's hot? Like, are people building on ETH? Are they building on Polygon, Solana? He goes, oh, everyone builds on Aster. I was like, come again? Like, did I hear you correctly? He's like, yeah, everyone builds on Aster, the L1 Aster. I was like, sorry, what? And he's like, yeah, everyone builds on Aster. He goes, Avalanche and Polygon are the two like second best and third best. Like they're fighting for that second spot right now. But he goes, Aster's super popular. I was like, all right. So I go, it's aster.network, the website, the future of smart contracts for the multi-chain world. Aster is a scalable, decentralized blockchain for the next big Web3 innovations. We provide infrastructure for building dApps with EVM and WASM smart contracts, offering developers true interoperability with cross-consensus messaging and a cross-virtual machine. I was like, so I pull up their Twitter, like 500,000 followers, 50 dApps are already built on it, talking about multi-chain world. Wow. They have staking. I was like, man, that is nuts. Listen to the backers: Polychain, Coinbase Ventures, Fenbushi, Hashkey, Huobi Ventures, DFG, GSR, Crypto.com Capital. It's the big names in Asia. I just found it very interesting.
Well, whoever's listening out there from the Aster team, if you are, we'll have to have you on the show.
I find it fascinating that
Japan's a very like insular market. Like they, it's pretty interesting.
Yeah. Well, so we have a research analyst who just joined the team. His name is Ren, and we're talking about it in Slack. And he goes, my Japanese friend says it's by far the biggest blockchain in Japan, huge government support. And another person goes, Aster ? And Ren goes, yeah, Aster founder is Japanese. They're pretty big in the crypto community in Japan. So it's interesting seeing like where the founders are from. Like Avalanche, actually their biggest area of retail the biggest retail area for Avalanche is in Turkey. Why? Because Emin is from Turkey.
Emin, yeah.
Or Emin, I still can't pronounce his name. But anyways, there's your alpha about Aster.
Wow. We'll have to go check that out.
All right, we got some layoffs from the exchange space. Tuesday morning, Brian Armstrong announced a 20% layoff. It's about 1,000 employees as part of a restructuring effort. Payroll, biggest cost to any company. Coinbase noted that this would cut operating expenses by 25%. This comes 8 months after Coinbase's first round of layoffs, which was about 18% of the staff, which back at the time is like 1,100 or 1,200 employees. What did Coinbase's stock? I think Coinbase's stock went up on the news. Let's see. Yeah, Coinbase's stock went up like 12 to 15% on the news, which just goes to show that investors do not want growth at all costs right now. They want companies to tighten the belts. And that profitability, tightening the belt, will sacrifice growth as long as you are working towards profitability is what investors are starting to value. We also saw blockchain.com. I don't know if you caught this news yet. Happened on Thursday. Blockchain.com just laid off 28%. No surprise. They had a huge lending business. Actually, at one point, they were one of the three largest institutional lenders in crypto. It was them, BlockFi, and Genesis. They owned the kind of lend to Bitcoin miner. They like crushed that vertical, and so obviously they've gotten hammered.
Yeah.
What else happened? I think this is the last bit of news, and then we can wrap it up. Is Ondo Finance? I don't know if this was a pivot or a new thing, but I remember them doing something different before this. But anyways, Ondo Finance announced the other day that they're providing U.S. Treasuries and institutional grade bonds on chain as security tokens. Only KYC parties can purchase them, and they carry a 100K minimum and a 15 basis point fee. The team claims the product is going to be used to serve DAOs. Interesting to even see them.
Think about like Maker, right?
Yeah, exactly.
Like Maker would have probably used Ondo.
Mako, yes, exactly. Mako. There's your collaboration. Yeah. It was just funny to see them use the word security tokens. I was like, man, that feels like a 2017 term.
STOs, baby.
STOs.
Yeah, interesting. This was the first. I ended up looking at this because I said, how did I miss this? Because I didn't look at the round, and it was led by Pantera, and it was the first public, at least, investment that Peter Thiel's fund did.
Really?
Yeah. At least a token project, or a project that signaled that they were going to have a token. And then they did like a public sale. They raised like another 10 million or so. But I think they raised like a 23 million Series B. Then they did a public sale of 10 million.
I just searched for Ondo in my email, and I have a message from Paul
Pantera.
I forget how you pronounce his last name, but Paul at Pantera from August of 2021 about Ondo. He's like, yeah, it's a new fixed income protocol that enables users to enter into both fixed yield and variable yield positions. So I think this was a bit of a pivot, but yeah, good for them.
Yeah, I've heard and seen decks of similar approach. People want to like tokenize treasuries and give people access to that. So yeah, pretty interesting use case, especially now where markets are and rates are.
Pantera led a $4 million round for Ondo. We had participation from Genesis, DCG, which is Barry and Barry, CMS, and CoinFund. Interesting.
That was the first, and then they did another one, I think, where Peter Thiel participated.
Yeah. Okie doke. That's all you got from me this week. I don't know if you if there's anything else on your mind.
No. Fairly interesting. Good start of the year. That's really it. I did read a really interesting book. Now that rates or all the rage and all the talk, I read a couple of good books. The first one that I read was The Price of Time: The Real Story of Interest by Edward Chancellor. Pretty good, actually. I love reading, like you said something interesting earlier on, like historical accounts of big movements, like the oil industry and how that developed, and and so this one was just a history of rates, and of course at one point, like it was like deemed like, I mean, Sharia law, for instance, doesn't allow you to have like interest, and historically interest has been a pretty contentious thing. So I found that book to be pretty refreshing. It does also talk about this like obsession with targeting inflation of this 2%, and how all, like, just giving you background on how all of that has come into formation. And of course it claims that it's probably going to be one of the more destructive policies adopted by central banks, this obsession with like a 2% inflation number, which I tend to agree with. But yeah, it was a good book that I read recently, so nice. Highly recommend, folks. Yeah,
talking about Sharia law. I was on did you ever use the platform Refinitiv when you worked in banking?
No.
All right, so there were some big platforms that are like, everyone uses Bloomberg Terminal, obviously, but there's also like FactSet and CapIQ.
Oh yeah, I use FactSet and CapIQ.
So FactSet, CapIQ. Refinitiv is another big one. They sold for $27 billion. They have I'm doing research into just different data and research businesses because we have our research platform now, and I was on their product set, and let me read you these products. It was
Sukuk.
What'd you say?
Sukuks, which is like these like like Islamic Sharia law compliant
Oh yeah,
bonds.
exactly. So look at this. So
It's like a
I'm on the
lease
website,
agreement.
and I was like, oh, this is cool. They have their target profiles like really baked out. So listen to the sectors: asset management, central banks, corporate treasury, investment banking, market data, risk compliance. Right, no surprise so far. Technology, trading, wealth management, and Islamic finance. I was like, oh
There we
man,
go.
that's so interesting. So then I click it, and it's like, yeah, discover our Islamic finance services and solutions, Islamic market data, research and intelligence, Sharia compliant trading, Islamic content and events, get data on
There you go.
Sukuk. I don't know what.
Sukuk, they're these like weird like work. They're basically Sharia compliant bonds.
Huh. Super interesting. So I never knew about this.
Yeah,
So I was
yeah.
yeah.
Yeah, I took a class in uni, and I have actually a paper where I studied like Islamic finance and sukuks and like yeah, probably more stuff that I hasn't served me much, but it was interesting to learn about it nonetheless.
I am reading a
So
new book.
if anyone wants a paper on sukuks, I can send you like this 28 page paper on sukuks.
I just started a new book, which is like a fun read. It's pretty short. It's like 250 pages. It's called what is it called? It's called Drugs in the Third Reich. I don't know if you've heard of it, but basically the thesis is that the Third Reich, like Hitler and the Nazis, was basically an altered. They were all yipped up on
On
drugs.
methamphetamines, yeah,
Yeah,
methamphetamines.
yeah, exactly. And I
Like,
just started it, but basically I think the thesis is that like there's this drug called Pervitin, which was like a low dose methamphetamine, which is like very similar to today's crystal meth. And they in the book they're talking about like Hitler would take this thing called Pervitin and supplement it with barbiturates, coke, even like steroids, sex hormones, and they also had an early form of OxyContin. So I'm like, oh man, that is nuts.
In the well, you know what they attribute? There's a great. If people don't want to read the book, there's a History Channel, I think, episode on this, and it talks about like in the kit that they gave soldiers of the Third Reich, they had a methamphetamine, and then when you compare accounts of like Western soldiers saying these guys like blitzkrieg, like this idea that like the Germans would just bulldoze through like battlefields and were more efficient. Yeah, guys, they were on meth. like, so why'd you win the? Why'd they do such a big advancement? It's like, well, because they were on meth, and like, why did the West won the war? Well, because like they ran out of meth. No, I'm kidding. As people like, they're like, why did we get into a crisis? Well, there was an Adderall shortage in the Bahamas, and so that's why FTX went down, right? That's like the plausible theory, right?
Yeah, 90 years later, no difference. So yeah, it's crazy. They said millions of this drug Pervitin pills were shipped every week overseas. Yeah. I'm like, that is wild. That's crazy. So
yeah.
Anyways, that's what I'm reading. Not really.
Don't do cool. This is advice, please, folks. Don't do methamphetamines. This is not an endorsement to go and do methamphetamines or Adderall or any substance, mind altering substance for that matter.
Thank you for the disclaimer. Yeah. That's about as good of a place as we're going to wrap it as we'll ever find. Guys, thanks for listening. Fun app, Santi, per usual. Thanks for joining, and see you guys next week for the Avalanche episode.